Well, hello and welcome to this Moneycontrol live stream. I'm Nandita Khemka, and of course, I'm here to take you through how the third quarter earnings season has really panned out for India Inc. Of course, the performance has been a fairly resilient one. That's the consensus view, but that's also reflecting in the market. If you look at the Nifty, it has hit a fresh record high today. So we will I'll be getting you a battery of experts to decode how the earnings season has really panned out, what the hits and misses have been, and which have been the winners and losers in the recently concluded earnings season. But of course, let me welcome on the show, Kunal Shah of Carnelian Capital, Gaurang Shah of Geojit Financial Services, as well as Nirav Karkera of Fisdom Research. Great to have you here, gentlemen.
Thank you.
Thanks a lot for joining in this afternoon. But let me come to you, Gaurang. Before we delve deeper into the earnings season, let me bring your attention to what's happening in the market today. Of course, the Nifty has hit a fresh record high of 22,150 or thereabouts. Here on, what should the strategy be like? Because should traders really look at booking profit right now? Sell on rise kind of market, or do you think hold your horses? There are more triggers, and in the run-up to general elections, you should really be invested at the current juncture. What are your own thoughts?
Thank you, Nandita, for having me on this show, and good afternoon to all of you all. I think last week, when Wednesday was a different story altogether when we got that scare from the US. We actually breached 21,600 on that day, Wednesday last week, that is, and then we recovered above that 21,600. And as a result of that, we are today where we are, all-time high. Congratulations to everybody. And I think there is a lot more steam left, Nandita. It's only a patience game. If you are an investor, if you have time by your side, if you're not really in a hurry to book profits, then I think give it to the market. We have a big event coming up in form of general election. And I think if the wind is going to blow in the direction where the market expects it to blow, and if we have a decisive government once again, as per the expectation of the market, my sense is that we are possibly positioning ourselves for a much more durable rally on the higher side. Now, given the fact that from last week, Wednesday onwards till today, we have recovered a decent amount of ground, there can be days or bouts of profit booking, which can be intraday. We open up on the higher side, we give off all the steam and recover, or maybe one or two continuous days of profit booking. It cannot be ruled out. But this rally is going to be a durable one for a pretty long period of time. That's what our understanding is. And in terms of valuation, some pockets may look a little bit expensive given the kind of focus that everybody had on their radars. Case in point, PSU companies last week, we saw profit booking. Before that, it rallied. So you will get those profit bookings, Nandita. But I think if you're not in a hurry, then give it some more time for a decent upside.
Right, Kunal, coming to you, would you concur with that? More steam left, and especially at a time when the Nifty Bank is still 2,000 points away from its record high, right? So, the private banking names are yet to catch up. The likes of HDFC Bank at 52-week low. You have Axis, ICICI. Even they are yet to really see some big moves. But on the other hand, you have PSU names like SBI that, the elephant seems to have started dancing, right? Even in terms of the quarterly performance, PSU banks have been far better compared to private peers. So here on, do you see the room for valuation catch up when it comes to PSU versus private names? Kunal, that was for you. I think, Kunal, you're on mute. If you can unmute yourself.
Can you hear me now?
Yeah, I can hear you. Please go on.
Good afternoon, everyone, and thank you for having me on the show, Nandita. So, two questions out here. One is there more steam left? I think there's no question about that. We are one of the best placed countries right now with one of the best ROEs, one of the best growth, and a very benign interest rate environment in comparison to the global, with very less exposure in the global markets. We contribute about 3% to the GDP, but when it comes to the exposure, we are still only 1.5% out there, right? So there's no question on all the fronts that whether there is more steam left or not. Obviously, yes, there could be bouts, as Gaurav pointed out, from time to time, but that should not scare away long-term investors. Now coming to the banks, yes, PSU banks have come out with good numbers. The one thing which is different for PSU banks with a lot of private banks is they are seeing better profitability growth in comparison to the private banks because of a lot of bad dates that have been written off for them are kind of seeing a recovery, right, which is still leading them to have credit cost which is benign in comparison to a lot of private banks, right? So for sure, most team left for PSU banks. In few PSU banks, there's still a lot of ROA and ROE kind of to catch up to happen in comparison to a lot of private banks, which are already sitting at one of the best ROA and ROE profiles. So yes, certain PSU banks still have more legs
Right, I think
there.
there's
Second,
an
commenting on the
issue.
overall banking sector, as economy grows, there is no better play than to kind of catch the credit upcycle, right? So, yes, banking along with economy kind of doing good. Private banks should also kind of catch up, is the view out there on the banks.
Right, I just want to add another question to this. Private banks, NIM pressure has been there. And if you go by what the RBI governor had said in the last RBI policy, he had said that, he's not really happy with the way the rate transmission has, in fact, the rate transmission hasn't really played out completely yet. So in that sense, do you expect the margin pressure to continue for a couple of more quarters?
I think on the deposit side, the cost of funds should probably see further inch up. There's no question about that because there's a lot of fights happening out there. But when it comes on the asset side, right, there's a lot of transmission yet to happen as well. So coming to the specific question, yes, there could be certain NIMs pressure out there. But then what is more important is how everyone is managing the liability side, that is cost of funds. Also, as you rightly pointed out, right, the regulator was not very happy with the loan to deposit ratio, which a lot of banks were deriving comfort from now. So therefore, the cost of funds could further inch up because there's no option but to kind of go back to deposits and increasing that at a rapid pace. So yes, NIMs for certain private banks could be a monitorable going ahead. But then there has been a lot that is happening on the asset side as well when it comes to transmission of the rates and increase in rates as well, right? So NIM pressure could be there, but selectively how private banks manage the liability side will kind of see the PPOP growth from here on.
All right, hold that thought. Let me also get in Nirav in the discussion. Nirav, I want to get in your thoughts on one pocket that has seen a phenomenal run, right? The auto pack, particularly the two-wheeler pack, right? Look at Bajaj Auto, Hero Moto. These stocks are perched at record highs, and the numbers were also fairly good, right? But here on, do you think the valuations are flashing red, or do you see more steam for upside? Also, I want to point out that the EV ramp up hasn't really been as speedy or as fast as the street may have liked. So could that be a risk going forward?
Yeah, so Nandita, thanks again for saving the most fun questions for me. So the two-wheeler segment is actually in a very interesting patch. There has definitely been some bit of outperformance, but one must recognize that this is also on the back of a weaker base, right? The two-wheeler segment did not see a lot of action or a lot of investor interest for quite a few quarters before this quarter, and it is only now in this quarterly cycle that the margins have started looking up, the demand has started picking up. So the pack is suddenly looking interesting, but let me assure you that this is not even the start for two-wheelers. So because the pricing and the valuations right now is not even aggressively pricing in a full rural recovery. It is not pricing in a fully ramped up and amped up version of the EV adoption that you spoke about, right? So while you said that the pace of EV adoption is not very fast and this could pose a threat to growth going ahead, that is true. But at the same time, we must also understand that the story is not as aggressively priced in as let's say if we were to look at the PV segment on the other hand, where the EV narrative has been very aggressively priced in. So in the two-wheeler segment, that is still largely absent. So from a valuation standpoint, it has inched upwards over the recent past, but I wouldn't say that it is unjustifiably so. Right now, I would peg it within reasonably and justifiable ranges at this point in time. So valuations is not the biggest of the concerns at this point in time. A bigger concern with respect to two wheelers is the sustained growth. So far it has shown some signs of promise, but the ability to sustain such a growth trajectory is something that one should be on the lookout for.
Right, coming to four-wheelers now, let me get in Gaurang. Gaurang, you've been tracking Tata Motors, right? But this stock, of course, has been firing on all cylinders. Management commentary was also fairly, optimistic. Your thoughts on Tata Motors in particular?
Well, I love that question, Tata Motors, because we've been positive on Tata Motors right from sub 300 levels, Nandita. I think it was the untouchable stock of the entire four-wheeler pack. And then suddenly, because of the turnaround that the company managed to do with its products offerings across different verticals and major turnaround in the high-end uh, product called JLR, uh, we are where we are. I think it is one of the most preferred stock in the auto pack. Uh, Management commentary with respect to new launches and the kind of market share that uh, Nexon already commands almost about 70% plus, if I'm not mistaken, in the EV segment. You have further more launches. I think I'm not mistaken. There are some four new launches lined up, one after another, in the next couple of months. Management commentary to make debt-free balance sheet will go down extremely well as and when we start having that impact on the balance sheet. And even at current levels, if you ask me, if you're invested, stay invested. If you're not invested, look at opportunities whenever the market gives it to you in form of correction to invest
Hmm.
into Tata Motors. And my sense in the entire auto pack, Nandita, is that from number three position to number one position globally in terms of automobile manufacturing hub, India is going to emerge out of that, and it's possibly going to attract a lot of new players into India, setting up shop as well. So I remain positive on the entire auto pack. Only thing is,
Hmm.
two wheelers may face a little bit of disturbances in form of monsoon because the entry level
Hmm.
segment commands a lot of volume growth from the rural India and semi-urban India. And if monsoons are erratic the way it was last year, then for a short to medium term, you might have some numbers on the lower side. But overall, I think all segments are looking quite comfortably placed in the auto pack.
But from auto to I'll get in your thoughts on IT as well. Of course, we had the Fed meet recently. Now hopes of a rate cut have been pushed back, right? A lot of this recovery that we saw in IT names, of course, I think were riding on hopes of a rate cut, right? But since that's not coming in, sooner than June now, that's what the market is anticipating. Do you think the rally that we've seen in IT stocks is in for a break right now, Gaurang? Or do you think that much of it is factored in and perhaps the street is ready for to wait for some more time and wanting to lap shares up right now in anticipation of the recovery?
So since last 2 years, when a lot of people were underweight on IT, we remain positive. Even then, we are positive now. More than the rate cuts, I think what will drive the stock price is the earnings, Nandita. Rate
Hmm.
cuts, if not soon, it will happen later. So I'm not really concerned about when the Fed chair will decide on the rate cut. I think we will have to leave it to the wisdom of the Fed chair to do as and when it is necessary, whatever it needs to do. And more importantly, I think for any central bank, whether it is Fed or whether it is RBI in India or whether it is any other central bank, it is more important to have a sustainable data in terms of lower inflation number. You can't just look at 1 month, 3 months inflation and decide whether to hike rate or to take a pause or to cut rates. So I think it will happen, if not now, then later. But I think earnings for IT companies is possibly going to look much better from 1st April 24 onwards in the new financial year. And though we have seen a rally, but I think earnings will possibly have much more momentum in terms of stock prices moving up or possibly even getting re-rated.
Right, that's the view then on IT. Of course, expect better earnings in the coming quarters, and of course, managements rather had also indicated that in terms of revenue, things have really bottomed out in the quarter gone by. But let's talk about the industrials and capital goods space now. LNT. margin pressure continues, even though order book has been growing, right? Especially thanks to international orders. But do you think the traction in order book will outweigh the margin pressure, and perhaps in the coming quarters as well, L&T will continue to perform well, or do you think the margin pressure will take center stage and perhaps we could see some bit of cool off? Consolidation has already been playing out in share prices, right? Do you expect that to continue now? Maybe I'll go to Kunal for this one.
No, so basically, the whole of the cap goods pack, has been seeing a lot of actually order book growth. To be very frank, a few power companies have been seeing order book growth also on the domestic front, and few other on the back of a lot of international orders coming in. For L&T specifically, yes, there have been margin issues which have been continuing for quite some time. But again, over there, the international order book has been growing at a very robust pace, and domestic not so kind of out there. But again, there's a lot of capex that has been lined up, and that is going to be there in the next 3 to 5 years. I mean, this is more of an investment-driven the spending that has been happening rather than the consumption-driven spending that is happening now. Considering that scenario to continue for quite some time, L&T continues to be a major beneficiary along with a lot of other ancillary players in the pipe segment, in the cement segment, which all will kind of continue to do good. And certain pockets are continuing to do good on the back of a lot of investment-driven spending that is happening across, right? So that pocket should kind of continue to do well, given the way we are envisioning the things to happen in the next 3 to 5 years, Nandita, basically.
Interesting. But let's talk about the mid cap poster boy, so to say. Polycab. Nirav, let me come to you on this one. Softer demand impacted the business to consumer mix, but the cables and wires segment remains stable, right? We saw strong growth in that segment, but of course there are some tax issues that the company has been facing. But would you still be constructive on a Polycab?
So sans the tax issue, and of course, a lot depends on what's the outcome of it. Polycab as a company seems structurally sound, and the fundamentals, from whatever is known in in its financial statements, it appears to be pretty solid. The demand for the core products, especially cabling and wiring, seems to be on a fast track to growth. We can expect an upsurge in demand for these core verticals for the company. So from a top-down approach and a top-down perspective, life looks pretty good for Polycab going ahead. Of course, a lot hinges on how does the financials play out post the investigation of the tax-related issues come out. But apart from that, we feel it is structurally well positioned in an upcycle.
Right. I think there is a time constraint. I have a whole lot of questions to ask, but I'll just cut it down to two or three more. Talking about consumption pack, and Gaurang, I'll come to you for this. Volumes have been a pain point, right? Even though there's been a recovery in gross margins for the FMCG majors, but due to a lack of any kind of improvement in rural demand, also the fact that the government hasn't really doled out any populist measures so as to put more money in the hands of rural India. Do you expect that rural recovery to get delayed, and on the back of that, FMCG underperformance to continue here on?
So Nandita, India was, is, and will always remain a consumption-driven story. That's what I strongly believe in. And you have a huge young population of 35% at the age of 30 and 28, which is going to be the driving force. And last year again, like autos I mentioned, last year we had an erratic monsoon, and rural and urban India demand tends to get impacted because of that erratic monsoon, and there's direct impact on the FMCG companies. You had a little bit of impact, but we have almost about more than half a dozen companies under our fundamental universe of FMCG coverage, starting with HUL, ITC, Godrej Consumer, Tara Consumer, Dabur, Emami, Marico, Nestle, Britannia. I think I would have possibly named the most of those names. So, and my sense is that, yeah, I mean, there was a cost pressure also in the last couple of quarters, which has now eased off. So slow and steadily, I think you will have recoveries coming in the margin, and operational efficiencies will also play an important role in terms of what kind of numbers we have as far as the net profitability is concerned. So we remain positive. There are quarters of pain, not only for FMCG companies, but any sector as a matter of fact, Nandita. But that does not mean that you have to change your long-term view unless and until
Hmm.
it is required to.
Continuing the theme of consumption, let me talk about the new age firms now. And Kunal, let me come to you on that front. Zomato has, handed in profits. Nykaa has seen, some bit of rebound, or some bit of strength in its fashion business that was, a pain point, so to say, for Nykaa. Your thoughts on some of these new age tech firms, even the likes of PB FinTech for that matter?
Well, we continue to remain cautious on this new age companies. Not to say that basically whenever there is the way the spending is going to happen and the way the businesses are going to evolve, change over a period of times. We've seen that happening historically. So while consumption is going to be there, there's no question about that. But the way the consumption kind of happens is obviously going to change, and there are a lot of new businesses that are going to evolve, right? There were no relaxos 20 years back, not to say that we are bullish on the same right now, right? But there are new opportunities which are going to come up, right? So as of now, we don't like or we're cautious on this new age companies. But the point that we are trying to drive is the value ecosystem is something which is going to change in the way the consumption is going to happen, which is going to come up with a lot of new themes to play this consumption basket, right? So that is the place where there's a lot of wealth which is going to be created in the next 5 to 10 years, basically.
Right, continuing with the new age basket, Nirav, I want to get in your thoughts on a PTM now. Of course, with the regulatory changes, in fact, regulatory curbs, you've seen how the stock has really reacted. Plus, a lot of mutual fund houses were buying into the stock in January, right ahead of or right before the RBI curbs RBI curbs came to the fore, right? So here on PTM, of course, the path to profitability seems to have been delayed. What are your thoughts? For somebody who's invested in Paytm right now, how would you, or what would you advise them to do?
Yeah, so yet another fun question. So Paytm is undergoing a very stressful period. I'd say, several institutions were buying Paytm, and, rightly so at that point in time. If one were to leave aside the regulatory risks that manifested, Paytm was painting a really strong and assuring story of growth. However, with the recent regulatory curves that have come in, it has really derailed the earnings growth that was expected. And in fact, in our previous conversation also, we spoke about the expected impact, and we mark it in the tune of almost one fourth to one third of the top line to be eroded as a as a sum total effect of the Paytm payment bank vertical being impacted, and a butterfly effect on all associated services. So that's one. This also includes certain attrition that we expect in terms of merchants and customers churning out of the Paytm ecosystem and moving towards other players. Of course, Paytm is taking correctionary measures, and it has deployed an on-ground team to retain especially merchants, and it has tied up with a new banking partner to facilitate transactions. However, at this point in time, considering the damage that has been done basis the RBI diktat on the back of non-compliance, this seems to be nothing more than a couple of band-aids to the situation right now. So we believe that it's a continually developing story, and the stock prices, as we can see, is reflecting and reacting to the continuous development. However, there is no reason to expect a very structural change or reversal in the trajectory that's happening. So this the development going ahead really hinges on how this issue is sorted out, and how does Paytm get back on track or does not in terms of its overall business plan.
All right, that's the view on Paytm then. But just one word, on how or what has been the one big miss this earning season. I mean, let's keep it short. Coming to you first, Gaurang, any misses this corporate earning season for you that stood out?
Small, minor, disappointment in terms of what one expected in terms of numbers and what the company delivered. But Nandita, honestly, I didn't find any such dark spots which can possibly translate into any kind of strong headwinds growth. So I would say, I mean, Q3 was fairly good as far as
Hmm.
corporate India is concerned.
All right, what about you, Kunal?
Yeah, I think there have been more hits than misses, but if I have to particularly say about miss, I think rural-related consumption stocks were a miss.
And Nirav, lastly, you, what do you think?
So I concur that the season was fairly good. However, we would expect a whole lot more from the power and capital goods segment.
All right, that's the consensus view then. More hits than misses. With that, gentlemen, thanks a lot for taking out time and
Thank you.
joining in this afternoon and sharing your insights with us. Well, with that, we've come to the end of this live stream. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates.